What does BlackRock see in the markets now versus where we're going to be 6 months from now? Do we just assume volatility to come?
Look, no, I don't think we should assume that. I think that compared to 6 months ago, where I think this was still a very unloved rally. I think people were not participating in this rally to the extent they are now. I think it makes sense to be a little bit more cautious, but the fundamentals are still very strong. And you look at the kind of global macro picture. You know, for example, PMIs in Europe yesterday yet again surprising on the upside after an incredible run. I mean, it's amazing that's still going on. Similarly, the Tankan in Japan. We just get this very, very strong global data picture. Similarly, I think we've got an unusual amount of the level of uncertainty around sort of G3 monetary policy over the next 6 months is very, very low. I think we could basically see where the ECB, the Fed, and the BOJ are all signaling us. So this is a pretty benign environment. Add into that, tax cuts I still think almost certain to happen this year. Everything's looking pretty good. The risk is that's very consensus, and I think the market is going to be a little bit more sensitive to, I think we were just talking about tightening dollar liquidity. That's definitely a risk, or any kind of loss of momentum in the macro. That's what we're looking out for.
Well, in the macro, and this goes to your work before you worked with the chancellor, and this would be at the Institute for Fiscal Studies. Is the quiet of next year really about burgeoning deficits? That's almost assumed within the United States, given tax legislation.
Yes, look, I think that this deficit path in the US is very unusual and is not ideal, frankly. We are getting into a late cycle in the US. From a macro point of view, the last thing the US needs right now is a fiscal stimulus, but it's going to get one. I don't think it's a huge problem. It's not a massive fiscal stimulus. I thought Janet Yellen was being very diplomatic earlier this week when she said, look, this doesn't automatically mean a faster path for rate hikes. I think the Fed will take it into account. It's not what the US economy needs. And it's just this kind of further support for a Federal Reserve that is pretty set on hiking 3 or 4 times next year. But I don't think it's something that investors are concerned about. It's just another thing adding to this quietly bullish mood.